You're watching BCTV. We're all about Branford. You're watching BCTV, Branford Government Television, a service of Branford Community Television. This program is brought to you in part through the support of the town of Branford.
Okay, we're going to get started. Town of Branford Board of Finance, regular meeting, May 23rd, 2022. First on the agenda is to approve minutes of the March 14th, 15th, 21st, and 28th meetings.
I'll make a motion to adopt the March 14, 15, 21, and 28 meetings.
I'll second it, Joe.
Thanks, Charlie. Motion's been made and seconded. For discussion? All in favor?
Aye.
Number 2 on the agenda is citizens' communication. And at this time, we generally enable members of the public to comment on the agenda items. Is there anyone who'd like to come forward on any of the agenda items at this time? Okay. Number 3 is to hear presentation from the Andrew Group and the CYL Financial Synergies with regards to the performance of the Town of Branford Police Pension Plan for the quarter ended March 31st, 2022, and if necessary, rebalance the portfolio. We will then move on to number 4, which is same with regards to the volunteer fire. Number 5, the other post-employment benefits, and agenda item number 6 and 7 with regards to Coastal Resiliency Fund and other matters with regards to the investments. Welcome, Rob and Mike.
Good evening. So I'm Robert DeLuca from the Angelo Group, and I'm joined by Michael Lepore from GYL Financial Synergies. And we're here to report to you all tonight on the various portfolios that Joe has mentioned. As customary, I'm going to take a step backwards and just give a report and a recap on the economy and the markets for the period that we're going to be discussing, as well as bringing that forward through current day. So the period we're reporting on is the quarter ending March 31, 2022, so first quarter of 2022. And as we all know, if you remember from our last meeting, the markets were declining in January to February. They continued to decline through March. And for the first quarter of 2022, we saw equity markets negative between 4 and 5%. And we also saw fixed income markets start to go negative as interest rates started to rise. So it made for quite a challenge from an investment perspective in the first quarter of 2022 as things started to soften. One of the 2 key factors that have been attributed to the market activity and the volatility are quite obvious and evident to all of us, which is the conflict or the war in the Ukraine, as well as the high levels of inflation. So those 2 factors are the primary drivers that are being attributed by the economists and the market strategists as to what's causing the market to change values. So that was a very difficult quarter, and in the past we have a bad, difficult quarter in the market, and we're able to report to the board, well, but since quarter end the markets have gone up. That's not the case tonight. Since quarter end the markets have further declined. The markets declined about an additional 10% through April and May, bringing us to date down roughly 15% around the global equity markets. And I'm oversimplifying the various markets between the U.S. market capitalization as well as international. So it's been a very large decline in the equity space. And that's come with quite a lot of volatility on a day-to-day basis, where we see the markets advanced today to the close. However, it just takes one bad news headline from a random company for the markets to think they want to move lower tomorrow. So the markets kind of have their own psychology and behavior, regardless what the PhDs think. So as you look at that, we've seen market valuations come down on a valuation basis. So if you look at price to earnings ratios, that price to earnings ratio has now come down to, on a forward basis, to about 17.5 times. So the stocks are becoming more closer to historical averages and valuations. And dividend yields have remained in the mid 1% range. At the same time, we've had interest rates rising, and I've explained this at a number of our past meetings about the expectation of the change from the Federal Reserve, which has started to happen. And in March, the Federal Reserve embarked on their first interest rate hike, which was 0.25%, and they followed that in the first week in May with their second interest rate increase of another 0.5%. So those two together bring the target federal funds rate, or the overnight lending rate, to their band of 0.75% to 1%. So short-term interest rates have been moving higher. And the Federal Reserve has also very publicly given guidance that they are planning to raise that rate at their June meeting and their July meeting at 0.5% at each meeting, which would bring that target rate to 1.75 to 2% by after the July meeting. The market is further pricing in, when we look at the valuation metrics in the bond market, an additional 0.75 to 1% of additional rate increases between now and the end of the year beyond that. That is anybody's guess what will really happen, because there's a lot that has to occur between now and September. If we read the Atlanta Fed comments today, there's also a contingent building in the Fed that after they do these next couple of rate hikes, they may want to pause and see what that effect has been to inflation and to the economy before they continue to raise rates further. So we could see a number of scenarios play out from the Federal Reserve. The other key thing that the Federal Reserve has embarked on is, well, they'll be starting this on June 1st, is the runoff of their portfolio. So as people talk about how the Federal Reserve has injected liquidity into the economy for the last number of years, their balance sheet has grown from $4 trillion to $9 trillion through the COVID environment. So now they're going to begin what they refer to as a runoff, which is not reinvesting a component of the portfolio as it comes due on a monthly basis. They're going to target to, over the next few months, get to a runoff of $95 billion a month between treasuries and mortgage-backed securities. So that will be an attempt to take money out of the system and decrease their balance sheet. So as a way to also fight their mandate of fighting inflation, to try to bring inflation back towards their target of 2%. And as we all know, we're well above the 2% target today as we sit consuming goods and services. So those risks are going to be difficult for us to navigate on the immediate term. So we think patience and diligence is paramount in this environment, and it may warrant being a little bit more cautious than just mathematical in nature of how we approach things. And we'll get to that as we go through the various parts of the portfolio. But that's a reasonable summation of what's been going on. We're not going to try to prognosticate the direction of the stock market on a near-term basis. It's clearly a very challenging environment, and that's why, again, caution and prudence matters in this environment. So, any questions there before I have Michael start us off into the various portfolios?
I think we're all set. You can launch into that, Mike.
Okay, great, thank you. So I will, I'll start with you all have the big book in front of you. So let's start on tab 1, page 19, please. And as usual, we'll take a 35,000-foot view to start. The portfolio, going back to inception, has had an annualized return of 5.9%. Consistent with, though that last count's slightly under the policy, which has been at 5.97%. That has come with about 8% less volatility than the benchmark, and that's indicated by that beta figure of 0.92. That's on a straight 100-point scale, so a number of 92 implies about 8% less volatility than that of the benchmark. And although we don't normally focus on this, I think it's worth looking just below the beta where we see upside deviation and downside deviation. Deviation is just the fancy word for risk. And it's very, and especially during times like now, it's easy to remember, but risk is a bi-directional. You know, there's risk to the upside as well as risk to the downside, even though folks, of course, are not concerned about risk to the upside. But you can see if we're looking at our upside risk, we have historically taken a little bit less than the benchmark, and that's the more conservative approach to the pension. So what that means essentially is that when the markets are running, we're leaving a little bit on the table, and that has come with protection on the downside. We have lower downside volatility than that of the benchmark, consistent with the overall theme that the Board of Finance has embraced really for as long as we've been working with you, and that is, it's not just what you make, it's what you keep. We're concerned not only about getting returns, but also steady returns and in providing some downside protection. And that has come, as I mentioned, through about 8% less volatility than that of the benchmark. If we look down a couple of rows further, we can see the alpha, which is the measure of additional or value-added return at 0.03. That's a modest number, but that, of course, is consistent with the underlying investment philosophy, which is using index funds exclusively for risk assets, and then having the bond portfolio be noticeably geared towards being a little more conservative with higher credit quality restrictions and the like. What all that means in dollars and cents on the bottom right of page 19 is that the beginning value going back to 4/1 of 2003 of $8.3 million. As always, ignore contributions and withdrawals because that just bulks up the numbers when we move money and rebalance, and focus in on the net cash flow. Net cash flow has been positive, about $190,000. That doesn't mean that just $190,000 has been deposited. What that means essentially is that benefit payments and deposits have more or less canceled each other out, and there's been about $200,000 more in deposits than benefit payments made, and then $20,517,000 in earnings, bringing us to the value at the end of the first quarter of just over $29 million. Now, if we look, we normally focus on the since inception number, but given the volatility in the market, I think it's also worth taking a look at the shorter term numbers. And as Rob mentioned, of course, it's been negative returns since the beginning of the year. If we look at the column to the left, where we see the latest 3 months, this is where you will see the decline. We started with $30,766,000. Again, ignore the contributions and withdrawals and focus on the net cash flow number. There's been about $497,000 in outflows so far in 2022. That's because the monthly pension payments continue to be made, but the contribution is made annually in July. And then investment losses of just over $1.25 million, bringing us to the $29,017,000 where we are, or where we were at the end of March. If you turn back a couple of pages to page 15. We can take a look at the numbers, and it's tough to get excited about negative numbers, but again, during a time period that's been challenging for the market, the more conservative tilt of the pension has provided some downside protection. You can see for the quarter we were down 4.09%, ahead of the benchmark, which was down 4.33%. For the trailing 1 year, that downside protection has led to some additional excess return. The return for the trailing 1 year ending March 31 was 2.54%, again ahead of the benchmark at 2.25% or 2.27. And then as we look towards the longer term numbers, taking into account the strength of the market, that's led to a little bit of a drag on relative performance in the intermediate, and then going back to inception performance really spot on with that of the underlying benchmark. I think it is worth noting in particular, if we look at the fixed income portfolio, although it's been a very challenging time for fixed income so far this year, this is the type of market where that more conservative tilt to the bond portfolio adds value. And we can see that although much like all bond portfolios virtually have been down so far this year, there's been some downside protection as well, owing primarily to the higher credit quality of the bond portfolio. Since the end of the quarter, of course, things have continued to move in a negative direction. We've had about $365,000 in net withdrawals and $2.1 million in declines from the market, and so the value as of Friday's close was $26,542,000. We had discussion. Actually, let me pause for a moment. Would you like me to? Should I go right into the rebalancing?
Yeah, on this one. Any questions on the presentation by Michael or by Rob at this point? we move to the rebalancing.
Okay. So you all have a photocopy of the rebalancing in front of you, which has a lot of, that was the typical typed rebalance that you see, and then you'll see there's some handwritten marks on it as well. As we typically do, we had a conversation with the finance director as well as the chair of the Board of Finance in regards to rebalancing prior to this meeting. And given the market volatility and given the historic conservatism of the board, and as Rob alluded to, the amount of unknowns in the marketplace, we think it makes sense to err on the side of caution with the rebalancing at this juncture. So what we are recommending essentially is doing a couple of the sales, taking some of the asset classes that have performed relatively well since the first of the year, particular high yield bonds, which although they're slightly negative, are still have outperformed the investment grade, and that is so that asset class is overweight by about $91,000. Real estate similarly, although it has experienced a negative return year to date relative to the broader equity asset classes, it's outperformed. So we're overweight there by about $138,000. And then the oil and gas master limited partnerships, which are the one area of the market that's actually been positive so far this year. As we all know, that there's been a resurgence in demand for fossil fuels. So it's about $315,700 that we would recommend selling from there. And then those three sales we would park in the cash account for the time being, and continue to monitor the markets and continue to have our regular conversations with the finance director. And with the idea at some point we would come back to you and we will want to reinvest that. But right now we think it's prudent to take some of that excess off the table from the asset classes that have outperformed on a relative basis and be a little bit overweight to cash.
Okay, so that's about 544,000 that you'd be selling?
Approximately, yes.
Okay, so questions from the board. Obviously, this the conversation now is different than the original presentation.
Yes, and in the original document that was circulated, it was a mathematical rebalance based on, just a static point in time in the mathematics of the policy. And the policy is meant to be a guideline to give us something to refer back to, but in extraordinary times, we want to be flexible around that and may be able to make adjustments where it's prudent.
So,
Go ahead, Charlie.
so the plan, Mike, is to sell those that are a little high, right, to balance down to the benchmark and hold the cash.
Exactly.
Fine,
But those that are underweight will stay as is. We're not adding
Right.
to those.
got it.
Okay.
So on this particular one, you're not suggesting, as originally proposed, to move out of the S&P 500,
Correct.
Correct.
so you're going to hold on those.
Right, with the S&P 500 being down to the degree it is, we're comfortable holding that at this juncture, still being slightly overweight relative to policy, but just looking to reduce exposure through real estate, master limited partnerships, and high yield.
Okay, Charlie?
Just one more thing, Rob. How many more interest rates are there planned?
The Federal Reserve has clearly stated that they plan to raise interest rates by 0.5% in June and 0.5% in July. The market is then pricing in an additional 3 rate hikes of 0.25% to occur in September, November, and
Okay.
December.
That's what I read or heard.
Right, and then the chair of the Atlanta Fed came out today with some interesting comments late in the day that changes the expectation a little bit on September. But that's, in reality, that seems like it's a really long way away, but it's going to come quickly.
Yeah, all right, thanks.
Okay. Harry? Questions, comments?
Yes, having received this afternoon, I had the opportunity earlier, because we got the report very timely, is that I was thinking to be a little more conservative. So what does conservative mean? It means putting more cash aside. So I don't have a number. I'd have to spend a couple of hours to do that, but I open it up for discussion, but
Yeah, I think
I'd
this-
like to see us a little more conservative on that, because
Okay, so this is moving 500 45,000 into cash.
Yeah, yeah,
So you would recommend doing something different?
a little more, yeah. Into cash.
That is something that could absolutely be accomplished if the board
Because,
chose to do that.
once you have the cash, and if we're fortunate to see some flattening of this new phenomenon we're going through in the market, you start going in and buying, and you can, you can ladder it, and work on a recovery. But if we don't have the cash, I'd love to say, I think we might see profitability in the next 2 quarters, and I think
Can we
I'm totally
co-chair?
wrong.
Can we-
So,
Take that to the bank.
So when you look at things in that perspective, I would just like to see some more in there.
So,
I-
the original concept here, and again, this is why we have these professionals that give us the advice, was that they would reduce the S&P 500 as well as the mid-caps, okay? But they're
Yeah.
also suggesting that it would be reinvested in other equities, which we've now recommending that not happen at this point in time.
Right.
So why, I guess to Harry's point, if in fact we'd want to take a more conservative approach, knowing that we're giving something potentially up on the upside, because taking out of this particular S&P 500, if you move that into cash, that's another $339,000. Again, was one of the original recommendations, but part of that was to reinvest in other equity sections.
Yeah,
So,
yeah.
Michael or Rob, you want to comment on the S&P 500?
Yeah, I think for practical purposes, when we're talking, that's, about 1.25% of the portfolio. So it's a fairly modest move one way or the other. I don't think it's, I think to a certain extent, it's what the Board of Finance is most comfortable with. I will make just to make one other observation. That is something that we did, kind of consider as we were talking through
We had a
this.
model on it.
But because we know that in about a month to a month and a half's time, the annual contribution will be coming in. So there'll be additional cash that can potentially be deployed. So, ultimately, I think it's, whether or not your suggestion, bears fruit, we'll only know with the benefit of hindsight, of course. But I think, there certainly is an argument to be made from prudence side, and this board has long, sort of erred on the side of being more conservative. The counterpoint, of course, is, the S&P is off, about 18-20% from its high?
Right, 17%.
17% from its high. So, we can, these snap-back rallies can tend to be pretty violent on the upside, too. So that's,
I know, I heard a commentary early this morning on one of the financial news channels, and it was almost with light humor. And he said, let's see, we've got interest rates going up. We're going to get a turnaround in the housing market sooner or later. There's continuing supply shortages and more likely coming. We have a 3.5% unemployment, but behind that is all the people that aren't recorded on the unemployment, that are just not working anymore.
Right.
So what's the good news? You're going to have $9 million, and I don't think you're going to be running into too many things to invest in 2 months. So I think it's going to be a slower approach.
Jim, you have any comments on this?
Well, the other thing I was going to say is that I noted that percentage-wise, it's a small piece of the overall portfolio, but we also are adding $1.4 million into the pension plan in July. So, there's typically we would rebalance that to the policy, but there's an option to keep that in cash as well. So, it's not tonight, but that could be another way of doing it while still participating in the market with what's here. So,
Yep. But you're going to have similar issues when you get to the OPEB fund, because you've got more cash there too. So, cash is not a bad thing. It's just that you're sitting on the sidelines until at some point in time you feel it's the right time. So, again, we're looking for a consensus here, but we're also, we've been very conservative in the past, given up on the upside, but protected some of the downside. So it's not the worst thing, but I think we're trying to also air what other board members are thinking. Victor?
Yeah, based on the advice of our experts, I think, especially with the cash coming in, I like to go with the original recommendation. That's my feeling anyway.
The original recommendation as adjusted.
As proven, as shown in this sheet, 545,000.
So Mike, would you just run through and tell us, or tell me anyway, what you plan to sell?
Sure.
And not to buy, just to sell.
Absolutely. Basically, if you look on the right-hand side, the right-hand column, the number that's $91,387, that's
Yeah.
the mainstay. Those are the high-yield
Yeah.
or low-quality corporate bonds.
Yeah.
And then moving down to the last two in the equity section, the iShares US Real Estate sell
Yeah.
$138,000.
Yeah,
And the Alarian MLP, those are the master limited partnerships, sell $315,700. Those three,
I got them right here. But what about the mid-cap?
well, that's what we've just been discussing, the
Okay.
mid-cap in the S&P 500.
Okay. So the total cash would be what?
About $545,000.
Okay.
So you'd be adding that to the,
Existing 663,000. I'm
Right.
sorry, existing 433,000.
433,000.
Okay.
So it'd be at about $1 million in cash,
Okay.
give or take.
Okay,
Or if we, excuse me, if,
No, go ahead.
if you wanted to sell the excess in the S&P 500 and in the mid-cap, well, that's another $400,000 between the two.
okay. Anybody else have questions? Pam, you're all set? You have any questions?
Joe, I kind of tend to, lean the same way Victor is. I mean, we got the 545 going into cash on top of the 433, plus you got another $1 million coming in July. I would think we stay with the plan, based on the recommendation from the investment team.
Okay. Somebody want to make a motion?
I'll move that we go with the original recommendation from our investment advisors.
I'll second it.
Okay, motion's been made and second. Comments, discussion?
It's for 545 cash, right?
Yes.
Okay.
All in favor?
Aye.
Aye.
Opposed?
Opposed?
Abstained?
Opposed.
Okay, so motion passes. Thank you, Harry. Thank you, gentlemen. And Pam, thank you. Okay, so we will go to the next,
So we're going to move into the next tab, which will be the volunteer incentive fire plan. And Michael's going to want us to go to page 18.
on which tab?
In tab,
It's tab 7 in my book.
oh, I apologize, you have mine are tabbed differently.
Fire, okay.
And we'll go to page 19.
So the volunteer fire, similar asset allocation to that of the police pension, of course. This was previously or historically managed together, and that was broken out back in December of 2015. So a somewhat shorter history as a separate pool, but similar results. Again, the volatility of the portfolio, or the beta, is 8% less than the underlying benchmark, and that's led to a slight positive alpha or value added. Again, because this is exclusively in index funds, there's no opportunity for an investment manager to add value. So so that comes primarily from the relative volatility versus returns of the portfolio. Moving back to page 15, we'll see performance quite similar to that of the pension, with the exception that because of the size of the fixed income portfolio, this is indexed as well, so you don't have that higher credit quality restriction that is in the pension fund. So that weighed slightly on relative returns of the fixed income. So for the portfolio, we were down 4.1% for the quarter versus the benchmark, which was down 4.3%. For the trailing 1 year, spot on with the benchmark at 2.29%. We're just 2 basis points ahead of the benchmark. And then looking at longer time periods, a little bit of a drag relative to the benchmark because of the higher cash allocation, but underlying performance really consistent with that, and return going back to December 15, 6.44%. Similarly, with the pension, there have been declines, of course, since the end of the quarter. Those, as of the close last night, or as of close Friday rather, amounted to an investment loss of $102,000, and the value as of Friday's close was $1,402,000. Similarly to the pension, the rebalancing recommendation is substantially similar, which you have in front of you. And of course, I seem to have lost mine in this pile of stuff, so bear with me a moment.
So as you're looking at the rebalance recommendation for the fire incentive plan, so again, we're looking to trim exposure to the Alarian Master Limited Partnership and the iShares U.S. Real Estate, following the same suit as we recommended in the police pension. No recommendations for the high yield, as that exposure is slightly below policy. And the fire incentive plan, as you may remember earlier, that has had a higher exposure to cash than the police pension on a relative basis. So this is going to bring us up to almost 10% in cash. So we would recommend allocating a small portion towards the fixed income manager, the fixed income index. So still, being more conservative in nature, but deploying some dollars from cash to fixed income.
So looking at your sheets, there would be in the right-hand column a purchase of just under $46,000 into the bond index. That's the iShares Core US Aggregate Bond, and then the 2 sales, similar to the pension, of about $2,700 in the U.S. real estate and just over $11,000 in the Master Limited Partnerships.
Okay, but you'd leave the S&P alone?
At this juncture, yes.
Okay. Questions? Charlie?
So we're going to sell about 13, 14 grand?
13, yeah.
13.9.
Are we going to buy anything?
Yeah, we're going to buy about $46,000
I see that,
of
but I thought we
bonds.
were going to use that same thing, hold the cash.
We're in the pension. We were overweight to fixed income, whereas we're underweight in the police pension. We're overweight to fixed income. So to bring that back to policy, it would necessitate selling bonds. Whereas here, because of the relatively high cash allocation that's already in the volunteer fire plan, we're underweight in bonds. And so to take advantage of, our rate's going to go higher. I don't know. And certainly, as Rob said, a certain amount of that is already baked into the market. So with the 10-year Treasury, I think is somewhere around 2.8 to 2.9% now. We think it's a reasonable entry point. Whether it's going to get better, I don't know, but at least we're getting paid to put some dollars into fixed income at this point.
Okay, other questions? Jim, you got any comments on this? No. Okay. Somebody want to move the recommendation of the advisors here?
I'll move it.
I'll second, Joe.
Motion's been made and seconded. Discussion? All in favor?
I'll go along.
Opposed? Unanimous? Thank you.
Okay, so now we're going to move into the Opeb Trust, which is going to be in tab. Michael identifies the correct tab for me. Tab 3.
Tab what again?
Tab 3, please.
Okay.
Tab 3. And again, we're going to go to page 19 and 20.
20. Yep. Okay, so focusing on page 20, we'll look at some of the same metrics we looked at for the police and fire pension. The OPEB, of course, has, being a relatively new fund, it's 11 years now that it's been, since the town's been funding it, but we have historically been very conservative with how we've deployed cash into the OPEB. And so you can see as a function of that, the volatility quotient or beta there is all the way down at 0.84, or about 16% less than the underlying benchmark. Similar to the pension, that's come with leaving a little bit of return on the table when the market's running, but with the benefit of providing downside protection when the market is challenged. Going back to 7/1 of 2011, you can see the beginning value of the OPEB was just over $4 million. Since that time, there's been about $24 million in net contributions and $8.4 million in earnings, bringing us to a value at the end of the first quarter of $36,530,000. The OPEB, of course, is heavily weighted to cash. There was the large cash contribution that was made a year or so ago, and we're on a multi-year dollar cost averaging strategy, if you will. So the rebalance does not take into account that cash position into account, but rather focuses on, similar to what we discussed for the pension, the relative underweighting and overweighting of the dollars that are actually invested. So you'll note when you look at the rebalancing spreadsheet, you'll see the kind of the subtotal line at $23,500,000 in the additional cash reserves of $11.3 million. Those additional cash reserves are already, long-term investment strategy has already been approved by this board, and we've started implementing it. So those dollars are not contemplated in this rebalancing. And so the recommendation for this evening, similar to with the other plans, and that is take the excess of about $40,000 from U.S. real estate and the excess of about $265,000 from the master limited partnerships, and add that to cash. So that will be approximately $305,000 that will be added to cash if you approve this partial rebalance.
Okay, thanks, Mike. Questions on this? Somebody want to move it?
I'll move it, Joe.
Second.
Motion by Jeff, seconded by Harry. Discussion? All in favor?
Aye.
Okay.
And then lastly, we have the Coastal Resiliency Fund, which is tab 5. And here we will move to page 17. A very short history here. Of course, the dollars were just the initial deposit was just made in the fourth quarter of last year. Unfortunately, we have some slight negative returns owing to the fact that this portfolio is heavily weighted towards fixed income by state statute, but as we discussed earlier, both equities and fixed income have had negative returns so far this year. And so we started with a $1,925,000 and in market declines since inception of $45,000. So the ending value was $1,879,000. Similarly, this falls under the category of cold comfort, but on a risk-adjusted basis. Again, some additional downside, some downside protection. Of course, that doesn't exempt you from negative returns, as we've seen, but both compared to the broad benchmark, you have been down somewhat less than that. Turning back to page 15, really only have one full quarter's worth of return. And the portfolio is down 4.16% for the first quarter. Going back to inception, it's been down 2.36% versus the benchmark, which has been down 2.8%. There is no recommendation to rebalance the CRF, and so this, unless there are particular questions, this portion of the presentation is really just informational. There's very little data at this point to review.
Okay. Any questions on this Coastal Resiliency Fund? Okay, if not, then we'll move on to agenda item number 7. which is again to hear presentation from these folks with regards to the fixed income separate account manager search and analysis for the police pension, OPEB, and coastal resiliency fund. This is Mike,
Great.
Rob.
Thank you.
So there was some change in key parties over at Mesro, who manages your fixed income assets within the police pension, the Opeb Trust, and now the coastal resiliency fund. As a result of that, it put us on alert to review them in detail and do a market assessment to see if they were going to continue to be the appropriate manager to continue with for these investment strategies, or if we should be looking to another asset manager to replace them. Whenever there's a change in key personnel, it's really important to do that due diligence. So we did a pretty extensive search. We brought that screen down to 3 alternate managers for consideration, which we put through a pretty rigorous request for information or request for proposal, which is the response summaries that you're going to see within this deck. And Michael will take you through the quick summation of it all, and I won't steal the end answer for you.
Okay. Thanks, Rob. So, as Rob stated, the one of the senior portfolio management team left Mesero. We got wind of that. It was well telegraphed, but nonetheless, it was a significant personnel change. He didn't go to a competitor. He went basically to a more exotic part of investing. He's doing private credit research and portfolio management right now. But that, when there is a change of that significance, it does. It sort of necessitates a deeper dive into the strategy. We had reviewed several alternative, and as Rob mentioned, sent out a request for proposal to 3 firms: City National Rockdale, Macquarie, and Sage Advisory, all high-quality fixed income managers. While we were undergoing this process, Mesero did hire a replacement manager to take Ryan Johnson's place, who is the gentleman who left. It's worth noting through all of this, Peter Hagel, who is one of the founders of the Mesero strategy and is still the #1 person there, is still leading the team and is going to continue to for the indefinite future. However, the fact that they did hire a replacement who's very well pedigreed, we've spent a lot of time talking to him. He was educated at Notre Dame. He's got about 20 years of experience managing fixed income portfolios. Most of that's spent at Legal & General, where he's done quite a good job growing their fixed income investment program. And from talking to him, we came away feeling that the way that he approaches fixed income management is very consistent with what Mesero has done historically. Tends to not view fixed income as a real return-seeking asset, but more have it in there as to offset near-term liabilities, as well as to provide some stability for the portfolio. So we like his sort of view of the fixed income world. To sort of cut to the punchline, our recommendation at this point is we have Mesero on a watch list. That's sort of standard practice because the senior portfolio manager left. However, we do have confidence in in sort of the legacy team, Peter and his group, that are still the leaders of the team, and the new manager that they've hired. By all accounts, as well as with our interactions with them, we came away with a good deal of confidence in him, and so we recommend keeping Mesero on a watch list. We will come back to you at future meetings and continue to report on that, because he has only been in place for about a month to a month and a half, although, as I mentioned, brings a lot of experience with him. So at this point, we don't recommend any change to the fixed income portfolio, but you have the due diligence here that's been performed. If at some point we decide that we don't like the direction in which he's taking the portfolio, or we decide we want to make it a change, we have our due diligence in place. But at this point, we think it would be premature to make an adjustment.
Okay, thank you. Questions on this, Charlie?
Mike, do these managers have to report to you before they make a move?
No. Before they make an organizational move, they tend to do so out of courtesy, but they're certainly not under any obligation to it.
How about an investment move?
No,
No.
they have
No?
investment discretion.
Yeah.
And so they have that discretion.
Right, and they have a micro policy
They have a
to adhere
policy.
to.
So for instance, the portfolio for the CRF, for instance, is limited to government bonds and government agencies. The portfolio for the police pension is limited to A2 or better credit quality, and there's different restrictions as far as how much of a single issuer they can own. They can't have more than 5% in a single issuer except the U.S. government, things of those lines. So they're obligated to stay within that investment policy, but no, they have discretion, and so they make buys or sells with their discretion.
Okay.
Thank you.
Other questions? Okay, do you need a motion on this, Jim, or are we just gonna?
No, I think basically there's no
it's
change,
more
and they're just
more
updating you as part of the due diligence.
More informational, thank you. All right, are they sticking around for number 8, or are you on your own?
No, just look around.
They can stick around, okay. So number 8 is to consider and if appropriate, adopt an investment policy statement for the town of Branford's Coastal Resiliency Fund. And Mr. Finch, you want to
Yeah,
start this
the
off?
only thing I'll add to it is that up until this point, we were, as Michael had mentioned, following the statute which outlined the investment parameters. The statute also allowed, if your town adopts an investment policy statement, you could go up to 50% in equities, which is probably not the night to be making this argument, but when the law was being written and presentations were made to the legislature, one of the sort of compelling statistics used in that presentation was that the Vanguard Group had done a study from 1926 to 2017 in a portfolio of 50% stocks and 50% bonds at an average annual return of 8.4%. So now the bond yields were higher than over that time, but realistically what we were trying to show is that having that potential for a higher return was a better vehicle to match future liabilities associated with the risk of climate change and resiliency efforts. So it's allowed under the statute. We could not have done that until we adopted an investment policy statement. So this is really that step to give us that flexibility. That doesn't mean that overnight we're going to make a change there, but it does give us that ability if we, thinking long-term down the road, if we want to do something within the next year or as conditions warrant.
Thanks. And as the board knows, we've adopted and approved investment policies for all of these funds, so this is consistent with that approach. Michael or Rob, you have comments on the proposed investment policy?
No, I think this was drafted to be consistent with the statute. We worked with the finance director in drafting this. The only observation I'll make is at the bottom of page 3, in the top of page 4, this gets to the point that the finance director was making, that in the way the statute's written, in the absence of an investment policy, there is a maximum of 40% in equities. So until such time as this policy is adopted, there's a 40% maximum. Our target's actually slightly below that, and that's really for ministerial reasons. If you do it exactly at the upper limit and then you have an up day, you'll be out of policy in the next day. But then there's also, in this first paragraph, in the presence of an investment policy statement, the limit on equities goes up to 50%.
Okay. The board has had a chance to review this. Are there questions? Dan, Harry,
Yeah, all set.
Charlie, good? Victor?
Good.
Jeff?
I'm good.
Move to adopt it?
Motion's been made to adopt this policy, seconded by Pam. Discussion? All in favor?
Aye.
Okay, thank you.
Thank you all.
Thank you all.
Okay. Agenda item number 9 is to hear an update from the tax collector. Welcome, Robert.
Good evening.
Hi, Bob.
Good evening, everyone.
Good evening.
Good to see you. So I'll try to make this as short as possible. We had a long agenda here this evening. So the first thing I want to talk about on the agenda is which I handed out prior to the meeting tonight, is the Moto Pass. And that's a point of sale for beach stickers and transfer station. So, currently, just to give you an example, we've gone through about 4,000 stickers in about 7 weeks. So the volume and the foot traffic of that is very, very high. Just Friday alone, we did over 100 stickers. So I'd rather be collecting taxes than giving out stickers, but that's part of the process. It's a great opportunity for our residents, and by utilizing this program, it certainly will enhance the taxpayer's experience with us and create a less of a foot traffic, as I stated earlier, and it's the ease of the transaction. So just as they come in today to pay online, they would have that same process, and it would be a landing page just for this transaction. So the thought process here is, again, getting them not in the office, but able to do this from their home. This will be mailed to them once they go ahead and apply for it. So they can pay for it online, and I'm not sure what the mailing time is yet. We're still working that out since it's a fairly new program. So I think this would certainly help us in our situation with transfers and stickers.
So, Bob, do other towns utilize this system?
It's right now, there's 5 towns that are looking at this. Madison is one, Old Saybrook is another, Trumbull is another. So they're all having the same problem within the tax office or the park and rec office, so they're trying to streamline it. So this was getting ready to be rolled out through COVID, and then they stopped the production of it, and I met with them a month ago and started to talk about this. So we would probably be one of 2 that would be the initial user of this.
And so this is specific to a vehicle, similarly to the...
Yeah, so what happens is QDS is our platform, so they have all of our tax information. They know every car that's registered, they know every piece of property that we have in real estate or personal property. So what happens is the applicant would go in, it would search that particular individual, it would know whether the taxes were current or not. If they're not current, they don't get a sticker. They would have to come in and see us or pay online to make that a current bill. Questions? Charlie?
Charlie?
Is there a plan to start this next June?
So the way the stickers work, it's every 2 years. So it's $5 for 2 years. I know it's very expensive.
No, when would the plan start?
Well, the plan would start immediately. Once we get it together, we can start it because we sell the stickers throughout the year.
Okay.
So I think it would be a great enhancement. Again, we're working out the cost. I'm not sure exactly what it's going to come down to. But again, I think the tax associates would be better off working on other tax items than stickers.
Is there any alternative for those that don't, either have access to a computer or difficulty using a computer?
Yeah, they can still come in. So we're not shutting anybody off. So we do have folks that don't drive, right? So they still like to go to the beach. So we have a program for that too. So they can either do this from the comfort of their home,
yep,
or come into the tax office and we'll go ahead and provide the sticker for them.
Okay, on to the...
All right, so the next one is sewer utility payments. That's been a problem for quite a while. So what happens right now, if you're an attorney or a taxpayer and you want to know what your sewer utility bill is, it's $170, comes out once a year, but you can't find your bill, or you're trying to close on a piece of property, you physically either have to come into the office or call us to see if that unit has been paid or how much is owed on it, or if you're a title searcher, you have to do the same process and visit us. By doing this, it allows attorneys and taxpayers and title searchers to pull up whether that particular tax bill or it's a utility fee has been paid. So we're going to do that in conjunction with using QDS, again, which is our software provider, and Invoice Cloud. So we use Invoice Cloud right now to pay our taxes, right? When you're sending in a tax payment over the internet, you're using Invoice Cloud. So I put those two together, and they're able to come up with a solution for us. The only thing I have to figure out, Catherine, is if they can separate the tax payment and the utility payment. So that's something
Right,
we're
two
still
separate
working on.
files, because it's two separate bank accounts.
Right. So we're working on that. So again, it's another enhancement for our taxpayers. Again, they don't have to come into the office to do that. They're not confused about whether they paid or didn't pay their utility tax. So it will show right on our landing page again, just like you see auto, personal, or real estate, you'll see sewer. And I gave you an example of that from, I think it was the town of Madison or Westport. I can't remember which one it was. I don't have it in front of me. So it looks similar to that.
So what's the implementation and the operating cost of these?
There is no cost to doing that. Again, it's just a couple of things that we've got to look at. Okay, Catherine?
Invoice Cloud, there's an additional cost there, I thought.
$25.
Okay.
So these are already included in the application, they're just
Right.
have been implemented?
Right.
Okay.
So if we can get that done, within the next quarter, I'd be really happy, and so are taxpayers.
Sure. Okay.
Property transfers, we continue with property transfers. So as of this morning, we had a little over 400 transfers completed. As we talked about at our last meeting, what continues to happen is new transfers come in every month. Just to give you an example, we got rid of 400. We had about 200 transfers come in April, so the bucket keeps filling. So once we get the bridge working, this will go away. And I think, Catherine, if I'm not being too optimistic, I think once the assessor moves the list over, we should have a number of transfers that would automatically go. And we'll
Yes.
pick up whatever the balance is.
Once Barbara sends over the file to generate the tax bills, that will update the owner in the address history as of that date.
Right.
So whatever date she does.
Right, and then if we continue on the same path we're on, then we'll have the same problem going forward, that we'll have to manually do this. So the idea, again, is to make sure we get that bridge in place. Sewer assessment cards, you can see I gave you an example there. You see they go back to 1964. They're a cardboard card. They're they're wearing down. The information on them, there's no payment information on them. We need to, they're our only system of record at this point, so we need to get those digitized and in safekeeping. They're primarily used from the engineering department, even though they're housed down in the tax office. There really isn't a reason for that. All of the sewer assessment agreements are housed with us also. So again, I'm getting some prices on that. We need to get those into at least a fireproof cabinet. Questions on that? WPCA, so I have been a commissioner on the WPCA since about 2012. Tax collectors never come in to give the WPCA an overview of where their portfolio sits. So I'll be doing that in June. Again, talking about where their delinquencies are in the portfolio, and also discovered one or two properties that the town owns that were a sewer assessment that really need to be abated. And I believe the selectmen can't do that. I think it has to be done through the WPCA commission. So I'll create a policy and procedure with them to get that done. I don't know how many more I'll find, but as we keep fine tuning things, we're coming up with operational issues. Return mail, we continue to work on the return mail. It just continues to come in. The two of our software providers I'm working with right now, they have a couple of programs that could go out and research our return mail. Therefore, I was hoping in our next tax cycle we would have less and less and less return mail. The statute says you have to send a tax bill to the last known address. So even though we know that address may not be good, we still have to send that. But just to give you an example, I ran just a test with them, and they came up with 168 new addresses that we would have sent out, would have been returned back to us. So we're going to continue down that path and see if we can get as much of that cleaned up as possible. Rate books. As I indicated in our first report, that the rate books were not completed from 2015 to 2019. I have the 2017 to 2019 rate books completed and in the town clerk's office right now. And by the end of the month here, I should have 2015, 2016 completed and received. Any questions on that?
Those are system generated?
Those are generated by QDS, right?
Okay.
So we put a that's in the budget every year. For some reason, it just didn't happen. So we made sure that they're in there. Alias tax warrants.
Bob, you got a question here?
Yeah.
What's a rate book, Bob?
I'm sorry. So a rate book is every piece of taxation that goes on in the town goes into this rate book. So this rate book would have real estate, personal property, sewer, auto, all in one book, or actually it's several books that goes into the vault in the clerk's office, that anyone can come in and see that. If we didn't have any system, you can go into that rate book and look at any address you want, and it will give you what the taxes are.
Got it. Thank you.
It's got everybody's bill in it, basically.
Yeah.
They actually used to post to those originally.
Mm-hmm.
Wow. They used to have to post to those rate books.
Yeah. So on the alias tax warrant, so we were not able to pull those off the system. It's just another collection tool for the tax collector. So we went ahead and customized the alias tax warrant as well as some that come off of QDS. If the assessor puts it in incorrectly, such as Robert Imperato Inc., and Robert Imperato is the owner, and it comes out as Robert Imperato, they cannot change that, so I cannot serve Robert Imperato, I need to serve Robert Imperato Inc. So now we have the ability to change that and do that. Couldn't before. Policy and procedures, we continue to work on policy and procedures. As we discussed earlier, I did go up to QDS for some training on May 6th. Had a great look at the facility, walked around, talked to everyone. Again, they're our software provider for the tax solution. One of the things that they don't have is a user manual, which makes it very difficult. So they have about 157 towns that they work with, and they have about 157 different versions on how to work their system. So that's one of their problems. So what we've been doing is working with them to get screenshots of certain procedures. So we'll have those, in our policy and procedure. So where I thought we might get it done in the first 90 days, that's just not going to happen. I think we can get it completed, going forward. Again, we have July will be a heavy tax month for us, so I think, we'll try to get it done within the next 90 days, I guess is my point. So we're still continuing in the draft process of that. Suspense. So I started looking at our suspense and, kind of going through the portfolio. One of the things I noticed that there isn't a lot of coding in that portfolio, so folks that are deceased or bankrupt or deficiency balances or just write-offs, aren't coded. So where I would think I would be able to look in a portfolio and say, give me all the deceased accounts, that it would call those up. Not going to happen. So we're continuing to do that. It's going to be a very manual function, and we'll do the best we can. Certainly, there are a a couple of areas that I know that probably have, about 300,000 that we might want to consider, but again, I'm continuing to work through that process. Again, the meeting with QDS, I think it was a very good meeting. I was able to express to them what I thought they did well and what I was dissatisfied with in my short period of time here. So, for instance, the site was down today. I wanted to pull numbers for tonight. I could not pull numbers. And they had, one individual, Linda, who I was trying to work with, and finally I went to Vinny, and I still, they fixed it after I left. I got an email, right? So, but that was from Friday. So I told them that, they can't continue to do this. And I know other folks on the administrative side have talked to them, but we'll keep on them. I am also looking at other portfolio servicers that are in this space, just to get some comparison done and to see, maybe at some point we decide to move. Not sure at where we are now. We also take a look at the small balance write-offs. We have a lot of folks that fall in under that $1 mark, but we're printing bills and sending them out to people, and of course they get a little bit annoyed when they get a bill for 5 cents, and I would too. But the problem is you have a statute that minimum tax is $2. So if you stay within that, if we don't take care of that small balance grows to $2, goes immediately from 5 cents to the next month, which is $2.05. So I've got a suggestion, a written policy up to Jim and JB on phase 1 to see if they'll go ahead and accept that. And if they do, we can move forward. I know Jim is checking with some colleagues as to what other towns are doing with that, but that's something we need to get done because it just it's a mushroom process. So we need to get that done. So we talked about rate books, alias tax warrants, suspenseful amounts. So current collection rate as of May 17th was 97.92. So we're hoping to bring it in a little bit better than, I think we're looking at 9.1, 98.1 for this fiscal year. So, and others, we've completed our classes. We've had 3 associates go through the CCM classes, and they've all passed at this point. And that's all I have.
Okay, thank you. Questions from the board? Really? Harry? Appreciate the update and continue the good work.
Thank you.
Thanks, Bob.
Appreciate it. Okay, number 10 is to hear a presentation from the Branford Arts and Cultural Alliance and the Shoreline Chamber of Commerce pursuant to a request from the First Selectman to consider these organizations and Branford's future ARP allocations. Jamie, you want to kick this off?
Sure, Joe. Thank you. And as the board is aware, the town is scheduled to receive approximately $8.2 million, of which the funds are to be obligated by 2024, expended by 2026. The final guidance on how these funds should be spent was issued on January 7th. In reviewing it, and the final guidance also gave some further latitude in terms of on the dollar amount we received, because of the dollar amount we received, to apply some of those funds towards general government services. And with the last your budget hearings, I know the board had recommended, and which the RTM supported, utilizing some of those funds to meet the community's needs through various departments. Tonight, before you, I was approached by 2 organizations, Branford Arts and Cultural Alliance, as well as the Shoreline Chamber of Commerce, to make a presentation to the board. As you may recall, I think going back a year ago when we heard we'd be receiving some dollars, we wanted to go through a process that was the town was familiar with, the appropriating body was familiar with, and that So the first stop is to come here and hear a presentation to the Board of Finance, although I don't expect action tonight, it's more of a presentation. I will just say, one of the eligible or encouraged uses for utilizing funds is for economic development. And although maybe not expressly stated through the guidance, however, there's been a movement not only throughout the state, but I would say across the country, to apply some to support the arts. I think it's actually interesting that we have these two organizations here tonight. I'm sure they'll probably touch a little bit on how the near future they are working with each other in some capacity or assisting one another. But I think it's also just in terms of, the pandemic and the impact it has on the business community, and certainly coming out of it. Obviously, the chamber relies heavily on the business community. That's their membership, and is sure to have a thriving business community. And that's the mission that they operate under. Certainly, the pandemic and what's happening now, we all understand the stresses that have been put on various industries. You'll hear a presentation from Shoreline Chamber of Commerce of a program that they've developed to help the business communities within the towns that they represent. So Guilford's already allocated some dollars towards this program. North Branford's is in the process of considering it, and here tonight they're asking Branford for a request. Branford Arts and Culture Alliance. This is an organization that was established a number of years ago. However, through the time of the pandemic, I think that's when they really established themselves within the community. They saw this as an opportunity of what they can do to support the business community. It started with a number of events that they've held in town that drew a pretty good number of people, encouraged them to support our community at a time where Main Street was faced with a large area of vacant window and storefront, and that doesn't present well for not only that space but the businesses in the area. They first started to fill those spaces, those windows, and have then since actually opened up a gallery that has been a draw not only for the people in Branford, but has brought many people in the town, not only to come to the gallery, and they'll speak to that, but their mission is really to support the businesses in Branford and to really be an attraction. So I see that both organizations play a part in the economic vitality of our community. So with that, I believe you have first Branford Arts and Culture Alliance. If I think Frank Carano and some others may want to come to do a presentation, and then we'll have Dee Jacobs, Executive Director of Shoreline Chamber, come on.
Okay, thanks, Jamie. Welcome, Frank.
Thank you. Appreciate the opportunity to speak with you tonight. Lots of familiar faces before me here. And I also want to thank Jamie Cosgrove, our first selectman, for recommending that you consider us for funding. We've been really fortunate to have in our first selectman a very responsive person to the mission that we embarked on. We've been here, we organized about 8 years ago, and we've been doing things around town for all that time, but a lot of people just weren't aware as much as we wanted them to be aware of the things that we actually had done. We, for instance, we utilized the Academy on the Green for art shows after it had been closed for many years, and there were a lot of people who came to see the art as much as to see the Academy as it was to see the art, because it had never been open to the public. So while we were utilizing that building, we were also providing an opportunity for people to see and appreciate one of Branford's landmarks. Beyond that, we have had activities in just about every venue that was available to us. Just want to mention a couple of the most important ones that I think. During the 375th celebration of Branford's founding, we were able to get the National Guard to reopen the Armory after 20 years closing. And on the occasion of the event that we sponsored that day, several thousand people came to visit the Armory because they had never been in that building as long as they had been in Branford, and others who just wanted to see it because they remembered it from their childhood. We've actually probably produced about 50 events over the course of these years. During the darkest days of COVID, we decided to try to utilize an empty storefront on Main Street, which had been dark for 2 or 3 years. We approached the owner of the property, and the first time we used the building was when we created an event for downtown Branford, and we called it the Doors of Branford. It was during a very brief period in the interim between the beginning of COVID, and there was a little kind of bright period, and then COVID came back again. It was in the fall, and we decided to have an event on Main Street to signify that the doors were opening again in downtown Branford. And we had 80 painted doors displayed all along Main Street, and it brought several thousand people to downtown Branford. They strolled along the length of Main Street on Saturday and Sunday. They purchased doors, but they also entered into the business establishments and got acquainted with the businesses that were open on Main Street, even during that period of COVID. It was a very successful event, but it also established our first relationship with the property owner, the Bigliotti family, who owns that property. We transitioned after that event. As it got closer to holiday time, we decided to light up the windows in that dark store, and we created a holiday display. And again, there were hundreds of people who came to downtown Branford to look at and enjoy the old-fashioned holiday window displays that we created. And we kept them up, as long as we could after the holiday, because people generally don't like Christmas to last forever. After that, we were able to convince the property owner to allow us to use the windows to display art, because the store was still vacant and not habitable. It was filled with all kinds of material. The holiday windows, again, were very popular. People enjoyed them. And when that period was over, we continued to just use the windows as sort of an art gallery, a street art gallery. And it was the beginning of our interest in providing Branford with an ongoing opportunity to appreciate and enjoy art. Last July, we were given permission to actually enter into the property, and we took the vacant space and turned it into an art gallery. We have shown the work of about 100 artists from the Shoreline. These are artists who would have had no venue to show their art during a period of time when most galleries were closed and the ones that were about to reopen were having difficulty doing that. We have continued to operate the gallery since then. It's been 10 months, and we've had a very successful economic experience there. Our revenue from the gallery over the past 10 months is a little over $102,000. People buying art in the gallery. Unfortunately, we don't keep all that revenue because we only get a commission from it. But the artists who have shown in the gallery have been able to realize an economic benefit from having sold art at a time when art was not readily available for sale. So where are we right now? We're in the gallery. We have a successful operation there. We have just entered into a lease agreement with the property owner who had allowed us to use the space rent-free, but 2 months ago we were pretty much challenged to either enter into a more formal agreement with them or have to face the possibility that the property might be rented to someone else. We decided to take a very bold step forward, and we did assume the lease responsibility. So now, in addition to other expenses, we have the rental expense. But we're really working hard as an organization that hasn't had business experience to become business oriented. So we have revenue that we receive from the sale of the art. We have rental income that we receive from the artists who rent space in the gallery for a period of time. We've applied for grants, and we received some grants from the Connecticut Humanities Department and the New Haven Arts Council. We have just been designated as the organizer for the Branford Festival Saturday Market. We are in the process of organizing a market on Saturday that we hope will benefit us financially through the revenue that will come from the vendors who will rent space. And we are working very diligently to expand our own ability to raise funds. We have a development committee, a fundraising development committee that is meeting for the first time on Friday. And we hope to come up with some ideas that will provide us with opportunities for ongoing income. But meanwhile, we do need some support. We need some startup support. We need the kind of support that you give to an industry that's being incubated, that's trying to really become something full-fledged. And that's why we hope that you would act favorably on this request for us to have the opportunity to receive some of those funds, because we do believe that they would help make a difference for us. We're not asking you to pay the rent for us. We're asking you to help build our capacity to continue to make the gallery as successful as it can be. We need to grow our marketing strategies. We need to develop strategies that will bring people in beyond the Shoreline, because we do think that we have a venue that can attract people from distance who will come to Branford to visit the gallery. And by the way, when they come to Branford to visit the gallery, they'll have lunch or dinner somewhere. And they might stop in one of the other shops along Main Street to make a purchase. It's been, there are studies that have been done that support the notion that the arts can be an economic driver in a community. And we are beginning to see the examples of that just by virtue of what's happening along Main Street, where the other shops are actually telling us how much they appreciate the increase in foot traffic that's been created. Because I can tell you firsthand, I think since the gallery opened in July, I have only missed one day in the gallery. And so I'm not there all day, but I'm there every day. And there is a steady stream of visitors who come in because they want to see this new art venue. And so we are creating this kind of buzz on Main Street that's having a spillover effect. When we have a reception, every time we mount a new gallery exhibit, which we'll be doing in June, and we get 150 or 200 people who come, many of them go out to dinner afterward, or they'll stop somewhere for a drink, or they'll spend some time walking around the center of Branford. So I think we really have had a very positive impact on the economic climate in downtown Branford. We would like to continue to work on that. We need to upgrade our IT system. We want to develop more and better communication strategies. We want to do a better job at marketing. And these are all the kinds of things that some financial support to us would help us accomplish. I think it's something that the entire town will benefit from. Last month when Congresswoman DeLauro visited the gallery, when we had our opening reception, I mean, she was very, very impressed with the venue and the quality of the art that we have on display there. But she was also very quick to recognize how important the arts are to any community, and the fact that what we've been able to accomplish in this, just in the past year alone, is something that we think has benefited everyone in Branford. Whether you come to the gallery to look at the art or buy the art, or whether you just walk by and look in the windows, or whether you have a different sense of what the center of Branford is like now, because we have something as elegant and yet as friendly as that gallery, where doors are open, we leave the lights on late into the evening because we like to have that end of Main Street pop in the dark with the glow of some bright lights. So I hope you agree with us that we are an important asset to the town, and that if you support us, you're supporting not just Baca and not just our gallery, but you're supporting the economic development of the downtown community. And the artists, when you think about the artists, 100 artists who probably would have had a very difficult time selling any art during these past 10 months. And we've sold over $100,000 worth of their art.
So Frank.
So I think that's something really that we should all be proud of.
Thank you. Maybe leave some time for questions from the board.
Sure.
Charlie, got any questions?
Frank, do you have would this be a one-time investment, financial investment, or are you thinking multi-year?
Well, that is a good question. Our goal is to be self-sustaining, We're asking for support so that we can build our capacity. I see this as a capacity building grant for us. Help us become more self-sufficient and hopefully much more successful at being able to take care of our own expenses. But down the road, if this becomes a challenge that is not possible for us to maintain, maybe the town might consider just some kind of small subsidy just to keep us going. But right now, We're just looking for some support, some financial support to help us move our operation further along and to help us be more successful.
Have you got a number in mind?
Yes, we were hoping that we would have a $50,000 supplement for 2 years, and that would help us accomplish some of the goals that I've set out with improving our capacity. Because as I said, the success of the gallery financially has been very encouraging, and we're going to continue to work to grow that. It's a total nonprofit operation. All of us who work there do so as volunteers. We have one part-time staff person who makes sure that the door is open at 11 and gets, shut at 5, and she's responsible for the day-to-day activities. But everyone else and all the other work at the gallery is done by volunteers.
So Frank, you're a 501c3?
Pardon?
You're a 501c3?
Yeah.
We're
a 501c3.
You can provide the 990s to the finance office?
Yeah.
Okay. And what's your annual budget right now?
It's about 110,000.
And so,
because I said
that's your current budget?
Yes, more or less, it's about that number. We, with the income that we get, 75% of that is paid back to the artists in fees.
Right.
We have, right now, we're paying $6,000 a year in rent.
A year or more?
$6,000 a month in rent for a total of almost $70,000 a year.
So when's your fiscal year?
Pardon?
Are you on a calendar year or fiscal year?
Fiscal year is March 30th.
March 30th, so you just started your fiscal year.
Right.
And so are you budgeting a deficit for this first year?
We're budgeting a deficit with the expectation that the funds that we will raise, we have some funds set aside that will help supplement any lack of income, when we factor out the new addition of the rental income. So we have funds that we have set aside over the past several years that will help offset that.
So you have a fund balance to at least start off, because you've signed the lease, so you've committed. What's the term of the lease?
Pardon?
What's the term of the lease?
The lease?
Yeah.
It's a 1-year renewable lease.
Renewable.
Yeah.
John can answer that question if you don't mind. It has several options.
Sure.
Yeah, if you can come up, Robin.
Hi, Frank, do you have any ongoing grants coming in?
I said we got $11,000 in grants. I just applied for a grant to the New Haven Foundation to help us with some of our sort of day-to-day operational activities. We would like to be able to develop some more programs, and that's something that we'd like to factor into our budget. We'd like to develop our relationship with the Branford Public Schools, involve more students in the activities of the gallery. We'd like to be able to have some consultants who would be able to provide more programmatic support for the gallery so that we would utilize that space more effectively ongoing. So we have a lot of plans and ideas that we haven't been able to implement or carry forward because we're really focused on the day-to-day operational expenses of the gallery.
Okay, the question about the lease.
Yeah, excuse me. My name is Robin Sandler. I'm the vice president of this organization, have been since its inception 8 or 9 years ago. The lease that we have signed with the landlord is a series of a one-year term with several options, including a 5th year. There's certain escalators built in. but we have the ability to be flexible if we need to be flexible in terms of occupying the space. And I know one thing, Frank hasn't touched upon is, it's my understanding of the art program is to deal with the harmful consequences of the economic disruptions that COVID caused to many of us, including the nonprofits, which we are. BACA has been very successful prior to COVID with its fundraising. In fact, so successful that we were able to donate $20,000 to the Branford Community Foundation to provide scholarships for students in the arts at Branford High School. But because of COVID, several of our fundraisers had to be canceled. We had a gigantic fundraiser that was going to be under the tent that is the book sale in September. It was called Under the Big Top. We projected to raise up to $50,000. Well, that didn't work because of the COVID disruption, putting us in a hole, but we still are confident that with our abilities to raise funds and to promote artists and perhaps help from this 6 of you and the town, we'd be able to keep the gallery open as a draw, and then we can get our fundraising back on track to be able to be much more self-sufficient in the future.
Thanks, Robin. Questions from the board? Other questions? I know tonight is the introduction, and so as Jamie pointed out, we won't be making any decisions tonight, but we did want to have a presentation and better understand some of your needs. So we do appreciate that.
I'll look at the 990s.
Yeah, if there's any information you can provide to Jim, if the 990s, I think would be helpful, and the budget, and I think if there's any other questions, we can get back to you, but we appreciate the presentation, and we do know, I know personally and others do, that you do a wonderful thing, a wonderful service there, and so.
Yeah, as I said, I wouldn't say we're in a hole. We're not really in a hole. But we do need that additional support to help us build our capacity to be more able in the future, to be self-sustaining.
Okay, and as Jamie pointed out, and we probably heard, we're looking at the ARPA funds and seeing how to best allocate them, and working with the administration and other boards and commissions, the RTM and such. So it's a process, but we again wish you luck, and any other questions, we'll get back to you.
Really appreciate your support. Thank you, Jamie.
Okay. Thank you. Okay, next we'll hear from the chamber.
May I just say something before this sound? There's been no
Frank, you got to come up to the mic.
Advocate.
Frank,
there has been no stronger advocate for our business venture at 1004 Main Street than has been the chamber, and in particular D. Jacobs. So I want to publicly acknowledge her support and how much it has meant to us to have that strong support from the chamber, and her willingness to help us transition to the Branford Festival operation. We're extremely grateful and thankful to you, Dee. Thank you.
Thanks, Frank. Hi, Dee.
Hi.
Welcome.
I'm Dee Jacob. I'm president of the Shoreline Chamber of Commerce. I started in October of last year. I come from a background of being more recently a business owner in the food industry in the Shoreline. And before that, ran a international business consulting firm working with large entities, small entities, and everything in between. Part of why I joined the chamber is I have a passion for the Shoreline. I have a passion that we are economically strong, and that the impact of COVID, the pandemic, and this further endemic state is really, really tough for our small businesses. The mission of the Shoreline Chamber is to enhance economic development and vitality. Primarily, we do that by serving our members. But I was very clear in my interview and with my board that we must do more, and we have to do more to support the economic development, particularly for those that are in need, and how can we do that? So tonight I want to take you through, gave you some handouts on the Shoreline Economic Boost Program. These are new programs. Obviously, the Chamber went through its own issues with pandemic, but we are in good shape in terms of providing the services that we do every day to our members. But in order to start new programs up, we seek funding. And so we're here to talk about funding from the town of Branford. Our request would be for $25,000 to kickstart one of the 3 pillars of our Chamber Economic Boost Program. The Boost Program consists of 3 pillars. The first one is coaching for business success. It allows us to provide to businesses within a certain town, whether they're members or non-members, the matching of a qualified coach or business expert to come in and help them assess a high-level focus area and direction for solution. Again, having been a small business person, you get to wear sometimes all the hats of doing business. And it's like having ping pong balls in a swimming pool. You're constantly putting them up and down. And the challenges of COVID have really exacerbated this issue. And so what we're really looking for is how do we allow particularly some of the smaller businesses to be able to take a step back with the eyes of someone else to look at where their biggest opportunities are. The second pillar is our business education series. Again, having been a small business owner, the amount of time I had to go to forums, webinars, seminars, whether they're on the internet or whatever, I never had time to get to those. And so we are creating a series of about 40 to 50 short videos on the YouTube channel from our subject matter experts within our community to get to right to the bottom line. No 45 minutes lead up to tell you, and at the end we'll tell you the answer. It really is about how to assess if your business is at risk for credit card fraud, how to understand what business insurance are applicable for your type of industry, and those kinds of things. 5 to 7 minutes in format. We've received funding from the Guilford Foundation and from the Community Foundation of New Haven to do this program, and we'll be starting it up in June. And then the last piece will be focused on the second part of the year to put part of our staff to be able to assist businesses buying grants that might be applicable or other sources of funding and help them through that application piece. But the first piece, coaching for business success, is what I'm here for you tonight. As I said on page 2, it's really about matching a Branford business who requests it with a local qualified business coach, predominantly from Branford. The coach helps them take a 1,000-foot view. We're really trying to look at, you can look at every day and there's always a different fire to fight, but really what's more at the root issue. And find where are the areas of solution options. And so we kind of have several roles and functions that we do. Starting on, if you turn the page, one is we set criteria for coaching and business engagement. So we want to make sure that we have a consistent quality process for hiring and engaging coaches and for assessing businesses to find the match. We recruit coaches in the area. We've already done this in Guilford. We have our first batch of coaches ready to launch. We contract with the coach so that we can assure a consistent outcomes and ensure we have the data to report to ARPA. And we also, from those coaches area, have a little what we call a coach's corner. Sometimes you can help someone, but the direction of the solution may require a more specific expertise, so we can tag in one of the other coaches to help in that area. Part of the ways to identify local businesses, we will be working with the EDC, taking ads in the newspaper, doing through our normal marketing efforts to let businesses know that this program is available in the town and assist the business with that application. Again, sometimes you just can't sit down to do it, and we want to be able to help people be successful to access the program. We review applications on a rolling basis, so we would take off how many we could handle in that month based on the number of coaches that we have, and that would allow us to ensure that we would be able to provide these in case a needy business came along and we wouldn't be out of coaching funds. From that, the coach comes and visits the business and really kind of looking at, yes, today, this vendor didn't deliver, Person didn't show up for work, all those kinds of things that we deal day in, day out with, but really what's at the root. And at the bottom of page 4, it's something like this. And there's really, as I walk about and visit businesses in our tri-town region, we cover Branford, Guilford, and North Branford, as well as 20% of our membership is beyond that area, east to Old Saybrook, down to Milford, north to Hartford. One of the things I hear about just not getting money in, or the other thing is I don't have anybody to go work in my business. And sometimes those can feel like impossible areas to address. And so what our coaches do is help drive down the issue to something that's actionable. The example I put on is sales are too low. So, well, is it people come to you? They go to your website, but they don't proceed and click through. Do they walk into your store and they check out your menu or check out your product and they don't buy? Or is it you're not getting enough traffic to the business? The first issue, people aren't buying your product, is really a yield issue. You have people, you're just not being able to convert that to sales, where the other one is you have a marketing issue. And I know several businesses that I've interacted with, they're spending a lot of money on marketing when the first issue is that they have a yield issue. We just really want to help sort that through. So in this example, they say people don't buy their product. So now we want to dive down again. Is it that people don't find what they're looking for in the particular type of business you are? Or is it that they don't find the value of the price to what you're providing? And again, we want to get to something that's actionable. Once we get to something actionable, then it's very easy, once we have that agreement, that, oh, I can do something about it, where before, what do you do about sales? I wish I had more sales. Oh, this is a tough time of year. It allows us to then come up with solution sets. Do you need mentor? Do you need a specific service to help you? Do you need funding? Do you need more education and training in an area? And to provide that direction. The other two parts of the pillars of the Chamber Economic Success Program is to help support some of those directions. So the investment that we would be requesting is $25,000. It roughly comes out to about 28 businesses assisted in the town. It is administered for the town. I know we're a Shoreline Chamber, but we're looking to do 3 town-wide programs. Dollars that come in from a town only go towards businesses that are in that town. We do right now have quite a bit of need. I spend a lot of my time recognizing new business and business milestones, but I also spend a lot of my time going by stores that are shut down, storefronts that are shut down, people who walk in my office and say, I'm going to go out of business in June. Is there anything you can do to help me? It's equally our part to help those, whether or not that they're a member, to find a way to set up this program. We do think for future funding that some of the larger corporations in the area can be a source to keep this funding going. Let's see if I can answer a couple questions for you. We are a 501c6. We do have 990s. And any questions?
That's great, thanks. Questions from the board?
I got a couple.
Charlie, go ahead.
What would incentivize somebody to say to become a coach?
So the ones that we've had sign up already, is really the predominant thing is, I really want to help my community. It's not about money because we really don't have a large stipend. What we want is a stipend so we can have a contract, so we have controls so that we're doing sort of the same process across all elements. But we've had several sign up and said, this is great, how do I become a coach? I want to help my fellow business.
Okay. And the other question I had, in this labor market, every business wants employees. So how can a business grow without employees?
Sure. Well, we've actually helped a business, not in this program, but just helping someone that was in trouble like that. And part of what we found is really their flow setup was more of the issue. Any of you have ever studied Lean and Six Sigma in the past, and there's something called transportation waste. And so just their layout in terms of using the staff that they do have more effectively. The other thing that we've also worked with a different company was the analysis that says you can't afford to pay, but you're shut down, 2 days a week, not doing business because you want to stay in that minimum wage area. And you're not, if you hire somebody, they're going to be gone because everybody is willing to up the game. And we've actually, helped one business think differently about what their rates are, and they've been able to change their schedule so they're open the 7 days that they wanted to be. It's not a cookie cutter answer. You really have to look through, what's the specifics of that business. That's why the coach spends time at the business with the manager or the owner.
Is it set how long the arrangement works? Is it, you get to have a coach for 6 months, 3 months, or is it just
so
a
it's
business
really,
plan?
if you want to think about it, it's more like how do you set up sort of a strategy to approach. So the coach is there to help you assess kind of what the biggest issue is and where the direction is, and then can recommend some areas to take that on. Certainly, if a business wanted to engage further on or find a mentor that's there, this is really to try to ensure that some phenomena that we've seen is there was a lot of money that came into our town through PPP money. Not all of that was spent on the right things, and what we really, so people have continued problems even though there was some infusion of cash. So the idea here is to understand what really is more important out of all the important things and to focus on a direction, and we'll help them provide resources where they can get that assistance.
That's good. Other questions?
Joe, I have a question.
Sure, Jeff.
So Dee, have you gone to Guilford and North Branford and asked for a portion of their ARPA funds?
Yes, in Guilford, we actually secured them quite early and received the full amount of funding. In North Branford, it's every town has a slightly different process, and so we continue to work through economic development there and the town manager in terms of getting to basically their town council, but they haven't really taken actions on what they're going to do on ARPA yet.
Is it the same dollar value for each town?
Same dollar value for each town.
Thank you.
Okay, other questions? Okay, well, thank you for your presentation.
Thank you for the time, I appreciate it.
Okay, good luck.
Thank you.
Jamie, any,
No, I just,
you're good?
would follow up on any information that the board members would like. I think we touched on a few things.
Yep.
So I'll continue to work with the organizations and get some additional information.
Okay, thank you.
Another question.
Go ahead, Charlie.
Is it are we set that this money, if we grant it or consider it, will come from the ARPA funds?
Yes.
Yes.
Okay.
Yeah,
Yeah.
these are.
Okay.
Yes. Okay, so, again, thank you for the presentations for both the BACA as well as the Chamber. Okay, next agenda item is number 11, to hear an overview of the fiscal year 2022-2023 budget from the Finance Director and set the mill rate for the fiscal year. Jim?
Okay, well, this will be the easiest overview I probably have given it in my years here, because the, congratulations, the budget that you submitted to the RTM was acted on unchanged, and as a result, the mill rate that you had recommended at 29.45, which is the current mill rate, remained unchanged. And so essentially, you would just set the mill rate at 29.45 as you recommended back in March.
Okay, so no changes from the RTM? Okay.
Motion to move the budget and the mill rate?
Motion's been made by Harry to adopt the 29.45 mill rate.
I'll second.
Been seconded. Is there discussion? Charlie?
I'm good.
Pam?
Great.
All in favor?
Aye.
Aye. Thank you. Nice job, folks. And with no other business to come before the board, I'll entertain a motion to adjourn.
So moved.
Moved by Victor,
Second.
Seconded by Harry. All in favor? Aye. Thank you.
This program was brought to you in part through the support of the Town of Branford. Watch town meetings and other videos on demand at BranfordTV.org.